Hello friends. Cash transaction results in black money, and black money is a bane of every economy. This is because cash transactions generally don't get reported, and as a result government misses its revenue which is due from the transaction. Now, several countries across the globe have taken a number of measures to curb the menace of black money. Today let's examine some of the provisions in the Income Tax Act which tries to discourage cash transactions. First, let's see the receipt of cash. Section 269 ST talks about receipts in cash. It says any receipt if it's more than 2 lakhs, okay, it shall be received only through an account pay, check, DD or electronic transfer. Now this receipt may be in aggregate from a person in a day. That means suppose I have a business, a customer comes to me 2 to 3 times and each time he makes a purchase of around 75,000. So totally in a day receipt from him exceeds 2 lakh rupees, then provisions of this section would be attracted. Okay. Next, the section says in respect of a single transaction. Suppose I sell a piece of land and consideration I receive in installment, though on different dates. But if such receipt is in cash and if it exceeds 2 lakh rupees, then perhaps section 269 ST is attracted. Then thirdly, section also talks about the receipt in respect of one transaction or one event. What is this event? Say for example there is a wedding and the event manager is paid in cash. Now if that, even though in installment, so the total amount paid in respect of that marriage, if it exceeds 2 lakh rupees, then this section is attracted. But of course exception is given to governments, banks, cooperative banks or post office savings bank. All these institutions can receive money in cash even in excess of rupees 2 lakhs. What about repayment of loan? Suppose I have borrowed 10 lakhs from a bank. Then at the time of repayment, I pay in installments and each installment would be say 1 lakh rupees. But in aggregate, total amount is 10 lakh. Then the question is whether section 269 ST is attracted. Now the section provides that in such a case, each installment is treated as one transaction or one event and there will be no aggregation of the repayment of loan. And breach of this provision, that is acceptance of money in cash in excess of 2 lakhs attracts penalty, and penalty will be an amount equal to the amount received in cash. What about the gifts received during marriage? Suppose I have received a total gift in excess of rupees 2 lakhs on the occasion of my marriage. In such a case, the section may not be attracted because section says that receipt from one person with reference to one transaction or one event. So when the gifts are received from more than one person, the section will not be attracted. We'll move on to another section. This is section 269 SS. Now this section prohibits receipt of loan, deposit or any specified amount, okay, if it is in excess of 20,000 rupees, then it has to be accepted only through account payee, check, DD or electronic transfer. And as in the case of section 269 ST, breach of this section also attracts penalty. Again here also the penalty would be equal to the amount of receipt. Now, earlier I mentioned specified amount. Let us see what is the meaning of this term specified amount. This is the money receivable as advance or otherwise in relation to a transfer of immobile property. Now, for example, I'm selling a piece of land or a building. Then as an advance, token advance or whatever it is, as an advance, I have received cash in excess of 2 lakh rupees. Then this is treated as specified amount and it attracts these provisions of section 269 SS. Okay. Now it is immaterial that the transfer takes place. That means after accepting the advance, for whatever reason, the transaction does not take place. So the sale is aborted. Then even in that case, the section is attracted. Now another section is section 269T. Now this talks about repayment of loans in cash. Again, if the repayment of loan or deposit is in excess of 20,000 rupees, it should be either by account pay check or DD or electronic transfer. Okay. Now this includes deposits with banks or cooperative banks or societies. That means the bank or a cooperative banks cannot give back the deposit money deposited in cash. If it's in excess of 20,000, they have to credit it to the SB account, savings bank account or current account, whatever it is. Now when I said deposit, the meaning of this term is very wide. It may include even rental deposit. Suppose we give a house for rent and we take a deposit. Now that also can be treated as deposit and the provisions can be attracted. Now banks or cooperative banks, as I said earlier, they are not supposed to give back the amount which is deposited by the customer in cash. They have to credit it to the account held by the customer. Okay. Now this section is applicable to the advances received in respect of transfer of an immobile property. That means for the sale of immobile property, I have received an advance or deposit, whatever you call it. Now later on, because the transaction is not completed, I am to return this money. Even then, if it exceeds 20,000 rupees, then I have to return it through account pay check, DD or through electronic transfer. Of course, this would not be applicable to loans borrowed from government, banks or cooperative banks. Here I can repay in cash. Okay. And again, as in the case of earlier sections, here also a breach of the section attracts penalty. Again, penalty is equal to the amount of repayment. There are certain exceptions like a government or banks, cooperative banks or a post office savings bank, okay, or any corporation established by government, okay, or any person having and person giving and taking, both are agriculturists, both have agricultural income and both do not have any other income which is subject to or which is liable for tax. Now that means, for example, A and B, A gives loan to B and at the time of repayment of loan, B gives back the money in cash. Now in this case, if the repayment is in excess of 20,000, section is attracted. But however, if both A and B are agriculturists and their only source of income is from agriculture, or they have a nominal income from other sources, non-agricultural sources, but this non-agricultural income is not liable for income tax, then in that case they are excluded from the purview of this section. Now one more section that is relating to this cash transaction is about depreciation. Now acquisition of a capital asset for, except of course land, for the purpose of business is eligible for depreciation. Now section 43(1) talks about what is the cost of the asset for the purpose of depreciation. With effect from assessment year 2018-19, this section says cost of the asset which is not paid by prescribed modes, that means by account pay check, DD or electronic transfer, then that amount which is paid in cash is to be ignored. If it is more than 10,000 rupees, and it is paid to one person in one day. That means, for example, I buy a car for the business purpose. Say I have paid 5 lakh rupees. Now, if I have paid this 5 lakh rupees either in cash or part of it, more than 10,000 rupees to the seller in cash, then I will not be eligible for depreciation because cost of this asset, that is car, will be treated as nil because I have paid this entire 5 lakhs in cash. In other words, to the extent of cash paid, a capital asset will not be eligible for depreciation. Coming to business expenses, section 40A subsection 3 prohibits expenses in cash. It says any payment to one person in a day, if it exceeds 10,000 rupees, okay, of course this 10,000 rupees is enhanced to 35,000 rupees in case of person running a transport business or goods carriage business, okay, then there will be no deduction, okay, if the payment is made by non-prescribed modes, that is not otherwise than by account pay, check, DD or electronic transfer. Okay. Of course, certain exceptions are provided in Rule 6DD. Suppose there is no banking facility, then the payment can be through by cash. Subject to these exceptions, no payment can be made in excess of 10,000 rupees. Otherwise, breach of this section would attract the disallowance in the computation of income. Now coming to health insurance, section 80D says that, of course, this section is applicable to individuals and HUF. Now this section says that any payment made out of income chargeable to tax, okay, and it will be eligible for the deduction, and deduction is available only to non-cash payments, that is payments made through account pay, check, DD or electronic transfer. But if the payment is made for a preventive health checkup, then the payment can be in cash. Otherwise, all such payments for the health insurance should be through only prescribed modes, that is account pay, check, DD or electronic transfer. Section 80G of Income Tax Act provides deduction for donations for charitable institutions or organizations. The conditions are that, number one, the donations cannot be in kind. That means it should be in cash. When I say cash, through account pay, check, DD or electronic transfer. And if the donation is in excess of 2,000 rupees, it cannot be paid by cash. That is, if it is paid by cash, no deduction is available under this section. Finally, let's take a look at section 44AD. Now this section says that any businessman, particularly small businessman, if his turnover is less than 2 crores, then instead of maintaining books, getting them audited and all, he can estimate his income at 8% of the receipts. Now this section further provides that this percentage of income, deemed income, can be reduced to 6% from 8% if these conditions are satisfied. First, the income or the receipts should be received only through prescribed modes, and the income must have actually been received at least before the due dates for filing the return of income. In such a case, income can be estimated by the businessman at 6% of the receipts instead of 8%. Thank you, friends. In case you have any queries, please leave a comment. Thank you very much.